Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, June the 27th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. For my commentary on everything from economic to geopolitical and market analysis, please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data here in the United States, not so much across the pond, but here we had CB consumer confidence came in at 118.9, expected to be 116.1, so a little higher than expected there. That's good. And then we had the Richmond manufacturing index, which came in at 7 versus the expected 4, so a little bit better than expected there. Kind of a flip from what we kind of were seeing with the durable goods orders yesterday, albeit the durable goods orders are more important, let's say, than the Richmond Fed for the most part. Then we also had Harker speaking this morning, which is an FOMC member, and then the Fed Chair Janet Yellen speaking right now as I'm talking, and then a little bit, Harker is speaking right now. Janet Yellen probably going to be speaking by the time I get this video out at 1 o'clock Eastern, and then we also have Kashikari speaking later on this evening at 5:30 Eastern. On to the overall markets, we've got crude oil back up again today, up almost $1 and above that fib level, and above, more importantly, my line in the sand of $43 a barrel, so $1.30 above that level. Market pushing higher, looking to go and test that 61 fib level, so keep that in mind as well before we may see a turnaround. But if you drew a line straight down this as a trend line, we could almost do this real quickly, draw a line through here. It's going to have broken through that, which is a pretty drastic down line. Computer trying to catch up with me here, but we drew it kind of like along that line, which is pretty, that's off a little bit, but you can see it's still above that trend area. So that's going to be something to keep an eye on, kind of breaking that downtrend. But we still have lower lows and lower highs. So we might easily see it want to peak out here somewhere in one of these fib levels before retracing if we get a pullback, but we're starting to see that bounce. I wasn't able to cover my XOP yesterday. I still have it working today. It's these the July 29 puts, trying to cover them for like 24 cents, which is about 50% of my max profit. I almost got hit on it yesterday. Really surprised today that I'm not seeing any tighter bids, trading closer to 27 right now. So still have that as a working order going forward, trying to get out. Then on to the gold futures. Gold futures kind of sitting there, mixed bag in the equities, kind of given a mixed signal to gold. So we are below that 50 fib level and breaking below where that point of control is, where the most time and volume's been spent. So you know, it could easily want to fill this in, because the charts usually want to create a nice big bell curve. One could argue that it'd go up to the value area high and kind of fill that in. So those are the tendencies for this, but could easily see that get filled in, just trading sideways right here. Then on to the bonds. Bonds giving up quite a bit of ground today, down over a point. You know, I've talked about these bonds trying to take out the interest rate increases, which I don't see is happening. I think they're going to continue to kind of increase these interest rates, despite the fact that the economic picture isn't as robust as what I think that they see it as. So, but I think they're going to continue to increase interest rates. And, you know, against my viewpoint on this, we are getting this 200-day and 50-day moving average moving quite close together. If the 50 crosses over the 200-day, that is more of a bullish sentiment in the market. So that's something to keep an eye on if you are bullish in bonds. I still have on a bearish trade in bonds, which is against me to the point of I'm just going to leave it on because it could be a max profit or max loss at this point. So there's no sense of me trying to take it off at this time. I'm just going to let it ride out, hopefully get a correction to get back down there into profitability. On to the Dow Jones Industrial Average, up 25 points. This is what I'm talking about with the mixed bag. Dow Jones above that 9-day moving average, but we've got the NASDAQ down below that 9-day moving average. And again, NASDAQ bearish day, down 26 points right now, but following along this 50-day moving average quite nicely for the past year almost, or at least for this year, and it is going to act as a nice big support for the bulls. Onto the E-mini. S&P's up slightly on the day by just a half a point, and it's trading lockstep with that 9-day moving average, just completely sideways. If we look at the daily chart with a 30-minute breakdown, the overall market just trading sideways for the past several days. One way to trade this would be somebody buying this on that support level from yesterday, looking for it to pull up and test this value area high. But this area right here at 24.37 is going to act as a pretty strong resistance. So bulls really need to push above that in order to gain any more traction to the upside. Then on to, if I can get that to close out, trades that I've done today. I haven't taken anything off. I tried to get out of a few trades yesterday. Wasn't able to. Excuse me. Excuse me. Live TV almost while I'm recording it, but it is a one shot and done for me. But NVIDIA has high implied volatility, no earnings in this cycle. I don't really have a directional assumption. I think I'm more, or I would think I'm more bullish for these stocks, but it's had a nice run, so I think it could start to calm down right here. So I decided, because I'm not really completely sure on directionality right now, I decided to put on a strangle, which is a pretty much market neutral strategy, and I went into the July and sold the 138, 170 strangle in there and collected $2.79. So hopefully I can get this to trend sideways for a little bit, get some of that volatility to come out of it heading into the end of this expiration and be able to take a profit on that. So looking to take advantage of a sideways market in NVIDIA. So then on to Costco. Yesterday I was talking about trying to get into the retail sector on the bullish side with XRT. XRT just kept rallying yesterday, never gave me an opportunity for a pullback to get into that market, so I didn't chase it. But with Costco, has high implied volatility. Volatility is starting to come out of this market. Remember that volatility spiked on Amazon, coming out and saying they were going to buy Whole Foods, which caused the rest of the broader market, Target, Walmart, Costco, and a couple others, Kroger, to really tank on that news. We're starting to see some support here. It's a nice bounce in Costco. It's right at the point of control, so it could easily just calm down right here. So I decided to add a little bit of long deltas in here with Costco because I'm more bullish than bearish on these particular stocks in this sector. So I went into the July, sold 155 puts and collected 99 cents for that Costco trade. So hopefully we can stay above that 200-day moving average and just get comfortable right here at the point of control, where that's where the most, like I said, most time and volume's been spent. That's where the most transactions have happened. That is where everybody's happy. Nobody's losing money. Nobody's making money. So that has a tendency to calm the jitters a little bit. So I think Costco could easily just trade sideways from here and possibly higher. So put on that bullish trade. Then on Texas Instruments, I'm not necessarily being tested on these, but I am short the 75.5 puts, if you remember, with this move down I decided to add some more, or sorry, I am short the, not the 75 and a half puts, but I think I'm short the 77 and a half puts in there. And I decided to add a little bit more to this trade. So I'm short the July 77 and a half puts. This morning I added to that trade and sold the July 76 puts in there, collected another 80 cents. Should increase my break even on those 77 and a half puts because I've collected a little bit more credit. I have increased my risk, but with this bottoming here, it looks like it's really kind of gotten a nice little doji here. Hopefully we can make that correction and go up and at least test that value area high. In that time, I should be able to get out of these nicely. So added a little bit more to that trade. That's all I've done today. Added a few trades, added some long deltas because my portfolio was getting short deltas with this pullback today, taking advantage of that, adding some more long deltas to it, and trying to neutralize it a little bit more. So Friday's webinar is going to be on synthetic, poor man's covered put, which is a synthetic short with an embedded stop in there, and we're going to cap it off with collecting a little bit of credit, lower our basis on that, and increase our probabilities of profit. So check that out at ProTraderStrategies.com. That's usually a widely watched one. We usually fill up the rooms lately in these, so get in early, get signed up early so you can watch this live and participate, because I ask you guys what you guys are looking at, what you guys are bearish, run through my rules. So I think it makes it a little bit more interactive and able to allow you to have this strategy sink in and remember it a little bit better, right? So that's all I got for you guys today, other than if you can't take that, take it easy.